What's up? It's Midas Monday, baby. We've got work to do. We're about a minute 25 out here from the close of Big Bar 38. And you know I'm all pumped up about it. So ATR sitting 44, maybe 45. I'm excited. Midas Monday. Let's pop on in. See what we can get done here on a Midas Monday. See if we can make it a Midas Monday. Man, we've got work to do. So this morning, bit of a move, a lot of wicks. Okay, a lot of sideways action, inside closes, especially 15 through 18. 19, 20, 21, 22, 23, not a whole lot happening here either. Okay, now we finally have a cleaner move. We recently, here on bar 38, just took out the low of day, at least the previous low of day. That was the wick low of bar 10. All right, new low of day is now, of course, the wick low of bar 38. So now I'm paying attention here to see if we get a nice reversal out of the bulls. You know we're looking at a big sideways range as far as the day is concerned. Now, that range would be, I mean, nearly 300 points wide, at least 250 points wide. So there's plenty of room in there for continuation trades, but a range nonetheless, at least when you look at the overarching day's context. If this bar 38, which by the way is currently a very small bull body, it's going to close as a small bull body, rolling over into 39. If this, I'll say bounce, fails, then we may just continue this bear trend into the afternoon, which would be tremendous. But as it looks right now, it looks like as we take out that low of day of bar 10, the wick low bar 10, again, the previous low of day, we may just head right back upside into the day's range, which would probably lead us more to a range mentality, or at least me to a range mentality, depending on how these next couple bars develop. I gotta tell you, I think I'd prefer that all this just fails and we fade a lot lower. 420 out, we'll find out here on bar 39, but I got my eye on that wick low of 38. If we can reclaim, or I should say the bears reclaim that wick low of 38, then I've got some action, most likely to the short side. How we doing today? How we doing so far? What's up, guys? Corey, Roy, Jackson, Gamma, how are we? By the way, ATR this morning getting up into the 70s on this single bar sideways trading range, bar 15 through 18. That was a volatile range. By the way, this right here, if you look at the full day, all right, that's the open until the present. This right here, just about the toughest, I'd say, area to trade during the day. If you made money in there, good work, but I will say trading this high volatility single bar sideways range consistently for a long period of time, or I should say over a big sample size, most traders are not going to do well in here. It's too hard to make money consistently. Jerome Treff, what's up? How are we? Biggie, my man, how we doing? KC? Roland, good morning, good afternoon, man. Who knows? Midday. Roy says, did you close your Discord? Nah, the Discord's still open. I'm not really in charge of the Discord, but I will tell you, I'm thinking about just getting rid of the Discord. I mean, look, in 2026, I let you guys vote with your activity, okay? And it seems to me like, and based on the reports that I get, that you guys don't really, maybe in 2021 people cared to talk to each other. at least traders in Discord. It seems like in 2026, you guys don't really give a shit about talking to each other. And what it does is it opens up way too much opportunity. There are a lot of scammers who love Discord. They have been impersonating me for 5+ years, 5.5 years now, trying to steal innocent people's money, which is, I mean, it's disgusting. I mean, imagine being that kind of human being. It's gross. But to this day, you know, they make fake Roensch Capital accounts and pretend to be me and say they're doing crypto trading. It's like, does that sound like me, big dog? Come on now. All right, 48 seconds out. ATR 47. We got bar 39. Lotus, how are we? All right, 39 rolling over. We're into the 40s. So now I'm watching Big Bar 40 here. So what I'm looking at here, clearly we have a big bear trend, I would say, from bar, I mean, in hindsight, from bar 24, 27 really was kind of the signal bar there. And then you have all the way down to 37. Obviously 38 then took out the low a day. By the way, if anyone stop hunted that, tremendous. 38 took out the low a day, and now a bit of a reversal. Obviously, it's not like we've been seeing such crazy trend days as of late. So environmental context wise, you know, it wasn't the most probable thing for 38 to break the low of day and just keep going in a huge bear trend. We know that, right? Those of you guys trading RAM should be aware of that. So here we are now, getting a little bit of hesitation. So now I got to let the market kind of tell me what to do, and as soon as it does, I'm doing it. Nico had a question on bar 10. Since it's a news spike, do you give it much value in finding your entries? Yeah, I don't ignore news spikes just because they're news spikes. It did put in a new low a day, and you can see in hindsight, you know, 37 came into 38, and 38 took out that new low of day and is now reversing, or at least trying to reverse. It's certainly not reversing yet. It's attempting to do so. 3 minutes out here on the bar, on bar 40. All right, 2.5 minutes, halfway through this 5-minute bar. Is anybody trading a 2-minute today? Yeah, see, a chart like a 2-minute can work tremendously well on a bear move like this if you're more of a scalper. 60 seconds. ATR holding on to 45.46. Okay, full day's range now is just under 300 points. So that's a pretty good full day's range, I will say. You know, right now, I think we're at a battle here. You get this low a day, previous low a day, bar 10. Right now, these bears want to continue this bear trend. But again, you know, environmentally or environmental context-wise, we just haven't been seeing these big trends just go, go, go lately in the last couple of weeks, at least not typically. A lot of times, once they do kind of backfill the full day's range, then they start to hesitate. And that's what we're seeing here out of the bears, letting the bulls take over on 38 and 39. Now, I'm watching, this is bar 41, we're 445 out, kind of a fresh bar. I'm watching 41. If I get a nice clean close out of 41, at least beneath the wick low of 39, I'll short it. I will short it. Yeah, guys, you don't have to ask permission to ask questions, dude. If I see it and we have the time, I'll answer it. Okay. You see this? These bulls stepping in? As soon as the bears take us down to that current low a day, the wick low of 38, that is the current low a day. Again, this is a 5-minute NQ chart, by the way. Nasdaq futures. As soon as they take it down, you get those bulls stepping in, but it's not just the bulls stepping in, it's the bears stepping back. There's always that balance, right? So it can either be one or the other or both. Whether it's somebody stepping back, somebody stepping in, or both. And when you get both, you typically see a more extreme reversal. I'm not saying a big whole day reversal, I'm just saying on a single bar, this turning into more of a sideways range since bar 38. You see that? All right, we got 41 rolling over, man. Now, if you're looking at this and you're like, man, why don't you have 400 contracts on right now? Because this is a relatively high risk for a big sideways range. I mean, you had that previous low a day, with low at 10, and here we are hesitating. Now, if the bears, remember what I said about 41, they couldn't do it. So if the bears can take us lower, I'd be open to shorting at low of day now, since it's a much shorter lived level compared to bar 10. But that means the bears here have some work they gotta do. Well, the bears aren't getting shit done. So, bulls, I'll tell you what, man. Let's step in, get a few consecutive bull bodies, get closed. I don't know, that 20 EMA looks about like a good spot if we can get a nice clean close above there if the bulls do want to take over. I gotta tell you, though, the easier way to get just a beautiful trade right now would be if the bears could take over and give me a nice clean close beneath the wick low of, well, 38. 41 got close, but the true low a day is 38. Bar 38, that is. Man! We need this thing to work out. All right. Question. They say, basically, I have positive expected value, but I'm hung up by opportunity. In June, I was positive overall, but I only took 10 trades. This is due to selectivity and obviously working full time. Do I increase my trading hours, trade more instruments, or do I wait for horizontal scaling, I'll explain, to kick in? I'm a bit shy of trading more hours because I don't have data on the times that I haven't been trading if I add those in. Yeah, so... Okay, first of all, you know, all you guys should be aware by now, 10 trades in a whole month is a fucking tiny sample size. The problem with 10 trades is even if your edge is really big, think of it this way. Would the casino be happy? Everyone knows that the casino has a built-in edge, right? They have positive expected value. When they deal you blackjack, they know that over a sample size of 1 million hands, they're gonna make money. That we're running the same business model. I mean, what do you think this is? Okay, we as traders need to maintain on average, not necessarily, you're gonna have some trades you take in hindsight, you're like, that probably had negative expected value, fine. Who cares? On the averages, you have to have positive expected value. Okay, so then it's a game of sample size. In this case though, they have no data. No data. If they're trading, let's say from market open until noon, or market open until 10:30, who knows? They have zero data on knowing can they even make money if they trade the afternoon or Asia session. What I would say here is I would 100% scale it horizontally. What does that mean? Well, if you're currently trading, let's say 5 funded accounts, it means everyone's initial instinct is to just trade more contracts per account. Don't do that. Don't do that. You're almost certainly just going to blow up because these prop accounts, they don't have very much wiggle room. Okay, you only have so with a personal account, you can scale vertically as high as you like until liquidity in the market breaks, which is ridiculously high anyway. With prop trading, the problem is you only have a $2,000 drawdown or a $3,500 drawdown or a $6,500 drawdown, whatever. You can't, vertically only goes so far. You can only trade more contracts so high, which is lower than you think, until, 2 losing trades in a row, which is going to happen to you. Even the best traders are going to lose 8 in a row sometimes. You're just going to blow up. So then you're like, well, how do you get bigger? You have to scale horizontally, which means trading more accounts. Okay? Copy trading. Again, this is for funded accounts, prop firms. You have to trade more accounts. I get it. Everyone wants to just trade 2 funded accounts because it's the cheapest option and make $1 million a year. There's only one way to do that, trade more contracts. Or you could say, well, I could take way more trades. There's only so many opportunities each day. Even if you take 22 trades, you can't take 200 and expect every one of those to still have positive expected value. Okay, so the real key here is to take as many trades as humanly possible while maintaining your positive expected value, which cuts that way back. And then you're like, okay, so I'm basically scaled as vertically as I can go. I'm trading as many contracts as I can responsibly in my funded accounts. If I go much higher, I'm going to blow it even on a reasonable losing streak that is going to happen. So what do? Do I take more trades? I'm already maxed out. No, now the answer is you have to scale it horizontally, which means get more funded accounts. And by the way, if you're scared of spending more money on funded accounts, if you're profitable, if you have positive expected value, that's ridiculous. If you're a media buyer, like, for those of you who don't understand what that means, if you're a marketer, you buy ad space on the internet, whether it's direct response or awareness campaigns or whatever, in an attempt to make money on the ad spend back, a positive ROI, whether it's immediately on sale number 1 or 6 months down the line. Okay, there's going to be a different path, right, for depending on the campaign, the marketing campaign. If you are buying media, which means running ads profitably, you're going to buy more media. You're going to spend money until it breaks, right? And then you're going to max it out, keep it there, and then start running more ads alongside it. Okay, because if you're spending $1,000 a day and making a shitload of money back, you're going to try to scale that to $100,000 a day, aren't you? Now, it's probably going to break somewhere along the way because as you continue to spend more money on this marketing campaign, you're reaching colder and colder and colder people, audiences, who don't know about Coca-Cola and don't care, right? Whereas the first $1,000 was hitting just in the slot. The people who fucking love Coke, they're like, oh yeah, I'm gonna go buy one right now. Okay, it's easier to make money the less you spend per day. It gets harder as you scale. It's the same thing with trading, but the beauty with horizontal, at least prop trading, right? With horizontal scaling, and actually this is true with vertical scaling in a personal account as well, because you end up with slippage the more contracts you trade. But let's talk prop trading, horizontal scaling. The more accounts you trade, really the only issue is copy trader problems. But if you trust your copy trader and it's a good copier, then you really shouldn't have any issues. Right now, I use the Affordable Indicators one. The link is actually in the description if you care. But I have no affiliation with them, really. I tested a whole bunch. This is the one that gives me the least issues. Now, you're still going to probably end up with problems. I've noticed issues once you get over like 35 accounts. It starts getting tough. But I mean, come on, 35 accounts, you could still do it. You know, you could probably take this thing to 50 accounts. You're just going to have to keep a closer eye on it. Once you've done all that, all your funded accounts are scaled about as vertically as you can go. You're taking just about as many trades as you can take per day while maintaining a positive expected value and not giving it away, right? Just taking more for the sake of taking more. You can't do that. And you've hit all the props and you're trading as many fundeds as you can without spending 12 hours a day managing all these, then you're pretty much maxed out. And then it's time to add in a big personal account and scale vertically over there. But let me tell you something, once you're maxed out in the prop space, the numbers are already really, really big. You have other problems anyway, like what to do with the money. Okay, I hope I answered. Does that make sense? Does that make sense, man? I hope I get it. You know, I like to go on and on and on, but this is nuanced stuff. All right, let's get into it. We're still in a big sideways range. Which EMA am I using? This is the 20 EMA. But let me tell you something, as far as indicators, I don't really care. Throw up a volume weighted average price, give me none. I don't really give a shit, to be honest with you. What's your strategy? What do you look for? I'm trading RAM. It's the wrench action method. Relatively simple. I mean, there's a lot of nuance once you get into the more advanced stages of it, but I basically assess context of the market, which right now we're in a sideways range since bar 38. And then I do logical things. Accept the outcome, move up. How many years do you expect to get to that level? I assume you mean the level of maxing out your prop trading? I mean, come on, guys. There's no answer to that question. If I give you an answer, it's fucking bullshit. The answer is however long it takes you to get there, which you're entirely in control of, by the way. I promise you, if you do not pick a methodology... If you don't pick a methodology and trade it and brute force, discipline for a few weeks and then get a track record, which leads to confidence, which allows you to deal with losing streaks without losing your fucking mind, and you trade a responsible size and you scale horizontally in your prop trading, you might be able to do it very quickly. Very quickly. Weeks. Okay, but if you don't do any of that stuff and you're one of these guys who just does things that they think make sense, or they read on Reddit that the market's going to go up on Monday, so they buy off the rip, ignoring price action completely, then I promise you it'll take 50 years and you'll still be in the same fucking boat. The beauty is you're in charge, so take that as you will. Okay, we got a minute 45 out, by the way, till the close up of bar 44. All right. Now you look at this. We've got basically a big sideways range here that I would draw just about like that. So 44 is going to be the first bar to attempt to close outside of that range coming into the 20 EMA. Sure, we'll take note of that. And this right here would be the incredibly early trade. And it will. It's going to close right above the wick high of 40. Okay, so we have 44. Beautiful. 45, I'm watching very carefully. If I can get a nice clean bull body out of 45 and a clean close, I'm getting long stop limit buy. See this hesitation right off the rip. That's that range coming back to bite these bulls. Seen this movie too many times, man. Come on, bulls. Big bar 45. Let's get a push. How do you copy trade on Ninja Trader? You got to use what's called a copy trader. You got to use a copy trader. On Ninja Trader, again, I use the affordable indicators one. I just like it the best. It's giving me the least fucking problems. I don't know if you guys remember, like over a year ago, before I tested this one, which has turned out to be by far the best that's given me the least issues, I was testing some different copiers, and one of the copiers fucking blew 20 funded Apex accounts in, I'm not kidding you, like a half a second, because I pressed my hotkey one time, and I still to this day don't know what happened. It glitched like a motherfucker and bought as many contracts, as many minis as it could until the account locked, and then it just blew instantly before I even knew what happened, and I was kind of pissed. But I was like, whatever, move on, shit happens. And then the company actually reached out to me, the copy trader company, and they're like, hey, you know, we heard this happened to you. This happened to a few people on that same day, and it didn't, you know, fix all the progress I had in those accounts, but they at least, you know, paid for all the costs of the blown accounts. So I was like, all right, cool. But the affordable indicators one has never given me issues. It probably will at some point, but that's okay. Cost of doing business. All right, we got a rollover coming here. Bar 45 into 46. 7 seconds. Nico, isn't it summer where you live? I would die in that pullover right now. Yes, sir. Yes, sir. It's hot. It's hot, but I keep it about 65 here in the office studio. So I'm chilling. All right, bar 46. Yeah, when you're copy trading, something that I've noticed, and this is true with basically all copiers, a little trick. When you're copy trading, I would encourage you to just use a dedicated leader account and trade one unit, whether it's one micro, one mini, whatever, and then you can trade the follower accounts. I've never had issues going from, unless you're not paying attention and you fucked that up, which I know people have. I've never had issues trading a mini in the leader and micros in the followers. I have had issues trying to trade multiple contracts of either micro or mini for the leader, and then a ratio of that multiple for the followers. Does that make sense? So someone in the chat here said, like, if they're trading 6 contracts for the leader and trying to trade a third per follower, which would be 2, sometimes that seems to confuse things. And the reason, really, a big reason, is because if you get a partial fill on the leader account, it wreaks havoc across all the followers. So what I do is, there's really 3 options, and I use all 3 interchangeably. For the leader account, you can either use a personal account and trade a mini or a micro, but just keep it to 1, so you would probably have a dedicated personal account. Or you can use a sim account and just like name it like sim prop leader account and just trade 1 micro or whatever, and then you use that to copy all of your funded accounts. Or you can dedicate, and I've done this a whole bunch as well, you can dedicate a funded account, which kind of pisses me off because it kind of kills that funded account's potential, but you can dedicate a funded account to being the leader, which basically means you trade 1 micro in it, and then trade your normal size for all the followers. If that makes sense, which I know it does. What I wouldn't do is try to trade a whole bunch of micros or minis or whatever in your leader account, and then trade a ratio for the followers. It confuses the software sometimes, especially when you get partial fills on the leader. The worst case scenario would be using like a personal account for a leader and trading 10 minis, because now you're with the real market and you're gonna get partial fills. Okay, so if you're trading 10 minis on the leader and trying to trade half ratio for all the followers, you're gonna have a lot of times where you only get filled with 7 minis on the leader, and now your followers are all fucked up. So just keep it to 1 on the leader for copy trading, prop firm, funded accounts, or evals, whatever. It's a lot easier that way. You'll have way less issues. All right, I'm keeping an eye here on bar 47. Now, what I should point out here is we basically got, you could draw it however you want, man. We basically got a big sideways range. You see this? Breakout attempt on 44. Remember, a whole bunch of you in chat were like, we should be getting long, and I said, no, it's probably gonna fail. Well, there you go, now it's failing. It's almost like we've been doing this a little while, huh? He says in hindsight. Question, when would you get short here? So look at this. You saw this big bear trend turn into a big sideways trading range, right? This is now a big sideways trading range. Now, the good news is it's relatively wide. We have an ATR of about 45. That's the average range here of a 5-minute bar. These are Nasdaq futures that we're trading. And you've got a width here of maybe 80 points at its tightest, probably a little bit wider as we start to widen out here, right? You got that low of day at the wick low of bar 38, 41-ish. If 47 could, in the next 2 minutes, which is when this bar closes, get down and close just beneath that wick low of 46, that risk stays relatively moderate, less than 1 ATR, and then I have room to put a short on, but it would really need to thread the needle. All right, here we go. Ready? 13 seconds out. Get my stop limit sell ready. Come on, Bears. Give me a clean close beneath 46. You see this? Look at this. Bunch of babies. They can't get beneath the wick low of 46. You think that's a coincidence? No, sir. No, sir. So I'm waiting on 48. Okay, now, bar 48. I'm watching 48. I do not want 48 to grow much more at all. I'd really prefer it if it stays kind of a small bare body. Why? Because then my risk is really small and I have plenty of room to the downside. If this grows too much more, I got to put on more risk. For what? For a potential stop hunt? This is a single bar, not a single bar. This is a sideways trading range. I'm not trying to stop hunt in a sideways trading range. It's just not that great of a trade. But I will take a little continuation short if 48 can stay a small bare body and close nice and clean, at least moderately small. And here you go. You got these bulls stepping on in. 235 out. We'll see what we get out of bar 48. See these bears, man. A whole bunch of babies. Less than 2 minutes, baby. Hey, man, if you haven't yet, I appreciate you doing so. Press like on the live stream, my man. It helps out a whole bunch. Or if you gotta do it, you're pissed, man, because it's Monday, hit dislike. Do they still have a dislike button on streams? I think they do, yeah? Beautiful, hit it. So right now, doing the right thing, hanging out. The right thing to do right now is chill, which is too bad because we got gambling to do, big dog. We got trades to take. But nope, a real gambler right now would be hitting everything in sight. We are doing not much. Wait until we can take 8 trades back to back to back. All right, here's the close up 48. Rolling over into 49. All right, I'm pulling out the old trick. Somebody, please, don't let us down. Make a phone call. I don't want to know who it is. Just get it done. 2 minutes. Don't you go anywhere. All right, welcome back. Appreciate you guys. Thank you. No one made a phone call. Appreciate that. Big bar 50, just in time. So, you could really make an argument now here that we're basically looking at this. And I think I think that is the argument, at least the way I see it. So, I'm going to need these bears, somebody, to be a little bit more decisive here. We still have about 2.5 hours left in the New York session, so there's plenty of time. ATR is hanging on to 40, which is good. It's pretty good ATR. At least this time of day, right? Yeah, we'll say it's a bit of a tall order to be getting long here. But, you know, something that a lot of traders I don't think fully internalize or understand, especially a lot of newer traders, is, you know how when you're online, you're in a YouTube live chat, or you're on Reddit, and everybody seems to talk as if they're 99% probability that they are correct in the direction. The top traders in the world and people who are doing this full time, right? We need to understand that this is not a game of certainties. This is a game of probabilities. So the better at trading somebody gets and the more money they make trading, it's really interesting. I've seen it happen time and time again. They start speaking less and less and less certain and more okay with this being a probabilistic game. So they'll say, yeah, I'm going to take that trade. I know it has about a 65% probability. 65% is not 99, homeboy. But it's worth putting on, assuming, you know, a 1-to-1 reward to risk just to make the numbers easy. Whereas somebody who's day one at this, they think that they're coming in, and they think every trade they're putting on is like a 98% certainty, and they let everyone know about it. It really is a game of the more humbled you get, the less certain you are with every single trade, but you are certain because you know that on every trade on average, you have a positive expected value. Okay, which leads to, over a big sample size of trades, meaning over a lot of trades that you take, a predictable profit. All right, so if you want to I don't know if you care, but if you ever want to come into a chat room online and really impress the people who know what the hell they're doing, don't speak in certainties, speak in probabilities only. I think that's going to get you a lot further if you give a shit. All right, bar 50. Whole bunch of nothing. All right, 51 actually looking relatively interesting here. Trying to break now. By the way, you look at that range, you're thinking, hopefully not, but maybe you're looking at that and you're thinking, yeah, we're breaking the range. No. This is each level is a range in and of itself, right? When I'm trading by myself, I don't draw lines. I just look at it and I know, okay, this is a sideways range. I draw it for the sake of you guys watching at home. Or at work. Man, in the chat, are you at work? Where are you right now? I know a lot of you guys like to watch in the car, which I take zero responsibility for. You're fucking watching the stream, you're trading, you're driving. Jesus. You know, I will say, it seems like we've got just about the highest concentration of full-time day traders on YouTube. In the chat, it's always the same people, the same regulars with new ones being added daily here, coming in, talking about their trading from their home trading office. It's ridiculous, man. It's like all you guys trade full-time. Fucking love it. All right, Big Bar 51, 2 minutes out. Chat, truth be told, got laid off from my job at Oracle after 21 years. You know what? Good. Good. Fuck them. They forced your hand, now you're gonna fucking show everybody what's up. Everyone's always talking about job security. It's a myth! There is no job security. People look at people who trade for a living and say, wow, kind of an irresponsible gambler personality type right there. I would argue the opposite, big dog. I'm in charge here. The trader is in charge here. You know, again, if you don't, I'm talking to the people who don't want to be working a job. If you want to be working a job, more power to you. If you don't want to be working a job, but you're like, I need job security. We just had our friend in the chat here say he worked at Oracle 21 years, got laid off. One day you walk into your job, the boss decides he doesn't like the color of your fucking tie and tells you to go home. If you've been waiting for 15 years, 6 months, whatever, to just go do the thing, this is your sign. Go do the thing. Big Bar 51, 10 seconds out. still in this kind of almost a new single bar sideways trading range. Sam, that's right. That's right, man. Look, I don't wanna, you know, like demonize the workplace. That's not what I'm looking to do here, but I will tell you, ask anybody who had been laid off after a long time. It's a weird conversation, man. You'll be at the Christmas party, it'll be fucking all smiles and palm pressing. 3 days later, you know, you're on a Zoom call with that same person and they're looking at you like they don't know who the fuck you are, telling you that they have to clean up for the new year or whatever. And your services are no longer needed. Sorry, 15 years out the window. Man, what about all the Christmas parties? What about the 4th of July parties? Don't give a fuck, homeboy. It's too bad. It's a damn shame. But the way it is sometimes, man. All right, we got 55 seconds out here till Big Bar 52. By the way, guys, hey, big heads up. TakeProfitTrader. Man, if you're trying to go full-time, start over at TakeProfitTrader. Daily payouts. Life is really expensive. I'll tell you what, you need money coming in. And they allowed you to take money out every single day above the buffer. So, again, when it's time to make the numbers look big, you hit Apex. Trade 20 accounts. When it's time to just get money coming in, You start a Take Profit Trader. Currently, Take Profit Trader code BIG, B-I-G, is 40% off and no activation fee, which is a monster deal. Monster deal over at Take Profit Trader, code BIG. All right, we got bar 53. See how this is melting down toward the low of day, which is the wick low bar 38? So I'm keeping an eye on this. I'm watching bar 53. As tight as it is, 53 could maybe offer a little bit of opportunity. I mean, I don't love where it's at in terms of the big sideways range. But we'll see how this guy closes up. All right, Bears. Getting real tight to this low of day. We got a big sideways trading range. Man. Okay, so we're halfway through bar 53. Chat says clean close. I'm going to be very tempted here. Yeah, me as well if we get a clean close. Now, the one thing that I am paying attention to, though, is this. I mean, realistically, you've got a big sideways range with an attempt at, I suppose you could call this, on a smaller time frame, a faster time frame, like a 2-minute chart or a 1-minute chart. You could look at that as a soft bear channel. But you get rid of that, it's like, oh, wait a second, this could be a wedge. Could be a wedge. And when we're so close in the lower third toward the low of day, when it's not really a stop hunt, most of those breakout attempts, I'll tell you what, they're going to fail, man. They're going to fail. So we're now so low that it's a tall order to start getting short here. You see what I mean? When we're in a big sideways range, it's by far the toughest environment to do logical things in. I will still take trades, of course. You guys have seen me take about 1 million of them in a sideways range, but it's got to make logical sense. And then you accept the outcome and move on. But in a trend, it's just like turn your brain off. At least that's what I'm doing. Turn it off my brain, any reason to get with the trend. But also with sideways ranges, you know, I think you guys have probably seen it yourselves with me as well. You tend to do the best in sideways ranges when you also just stay as dumb as humanly possible. I think sometimes as traders, we're a little too smart for our own good. So when you have a big sideways range like this and you're looking at it, when you look at this for too long, like you start looking at this for like an hour, you start seeing every possible option, and you start to forget that in the overarching context, according to Ram, it's just a big sideways trading range until proven otherwise. So, same thing with trends. One of the biggest things I can tell you to trade better immediately, flip of a switch, is identify the context of the market you're looking at and then turn your brain off and stay as dumb as possible. I know that sounds counterintuitive, but I promise you it has helped myself and a whole bunch of other traders tremendously. Doesn't mean you do dumb things, you still have to do logical things, but as far as assessing the context, turn that brain off, man. You can outthink, or I say overthink, and start doing things that you think are smart, but are actually just kind of dumb because you start ignoring the context again. Ed says that shouldn't be too hard for me. Yeah, I'll tell you what, being a day trader has almost nothing to do with smarts. Almost nothing. Think back, the Chicago trading pits back in the 80s. The people who were making the most money, almost all the exact same personality type, almost all of them were the problem kid in high school, etc. You had a whole bunch of Harvard grads flying out to Chicago to try to do this thing. Almost none of them made it. Because trading has very little to do with intelligence as far as, being a day trader. Okay, a lot of you guys, you know what you need to be doing. It's time to just buckle down, be disciplined, and do it without any compromise on the rules of your own methodology, man. These are the rules you put in place for yourself. Follow them. All right, big bar 54. Come on now. Okay, so you see how these bears now are having trouble getting down through the low a day? This area here is really a kind of a tell. Because you've got that low a day. You should probably draw that the actual low a day. And then we've got these two arguments, right? So you have either a big wedge, which drives this to a point and then typically snaps, right? Or we just kind of fade back up through here and backfill the whole trading range, which I really do not want to occur. Unless it's a big reversal type play. But ATR is still in the mid to high 30s, sitting 37.38 on the average range here of a 5-minute bar on NQ. Which, that's reasonable. That's not too bad. Oh, you bulls! You see this? Bulls taking us away from that low a day, at least trying to. Back up into, I will say, the high end of that wedge. If not back up into the trading range, we will see. Mario, my man, how we doing? Oh, we got 3 minutes left here on Big Bar 55. All right, 55 here coming up into a test of, well, trying to break through the high end of this wedge. All right, that wedge right there. We've also got this big range, and you got the 20 EMA, bottom of the barrel in terms of relevance, but worth pointing out. Minute 55 out here on Big Bar 55. ATR sitting at 38. All right, 60 seconds here. Now, by the way, you gotta, make sure you're looking at both looks, the wedge and the range, because while it's really easy, if you only see the wedge, look at this. If you only see the wedge, it's like, well, I need to get short, right? Well, this was a range longer than it's been a wedge. Okay, so even if the short ends up working out, I think it's basically like a 50-50 or barely better trade, which for me, that's not enough. All right, Bulls. Come on now, man. Give us a nice clean close. 56, 4 minutes. Got that wick high of 45. That's an important wick, of course. Low of day still sitting at the wick low of bar 38. Big old bull body. There we go. All right, we got 2 minutes. Bulls putting on a show here, at least trying to, on big bar 56. Minute 50 here till bar 56 closes. I'm going to be watching the close here. I've got my eye sort of on that wick high of 49. You know, 47-ish. It's kind of what my eye gets drawn to. Obviously, 45 is that spot. Out of that key area. Come on, man. 56! See this? Bear's stepping back in right beneath the wick high of 55. So, you know, by the way, if you're looking at this and you're staring at a chart for an hour, 2 hours, like first of all, you get this big bear move, beautiful move, into a straight up sideways trading range, and you're getting very frustrated as a day trader, right? Because there's really not a whole lot to do. We know a sideways range is the toughest, most difficult place to be consistently profitable as a trader. I get it. It's frustrating. Don't let it get the best of you. I promise you that traders who do let it get the best of them and lose their shit every time it goes sideways and they haven't, oh my God, you're a fiend, man. You haven't taken a trade in 90 minutes. What are you going to do with yourself? The guys who win at this, the people who win at this, are able to sit on their hands for 2 hours and then boom, when the opportunity hits, 8 trades back to back to back. This doesn't look, at a professional level, being a day trader, does not look like I take a trade every 35 minutes on the dot. No. You could have 3 hours of doing absolutely fucking nothing, and then in 45 minutes, you take 6 trades. Okay, you just gotta wait for that opportunity. And here we go, we got bar 57, backfilling that entire move. You see that? Bulls giving way. Question, was bar 37 too close for a stop hunt? No, 37 was fine if you took it. If you did not take it, I also see why you didn't take it. 37 was one of those more nuanced trades that could have gone either way and been logical as long as you could explain it proper. Well, I guess to me or someone else who deeply understands RAM. As long as you can explain why you made the decision you did, either or on 37 would have been logical. All right, we got a new bar here, bar 58. 56 inside close, 57 inside close, 58. Come on, 58. We've got work to do, man. This is driving me nuts. So if you're just joining us, right now we've got basically this big sideways trading range. Okay, which it's wide enough. It's 80 points wide with an ATR of 36. It's wide enough for me to do stuff in here. The problem is this market is the problem. We're basically seeing a whole bunch of wicks, a bunch of inside closes, which tells us what? There's a lot of indecision going on between the bulls and the bears right now. And when there's a lot of indecision going on, you know, it reminds me of the phrase that I always use. Can anybody predict it? If the market's confused, why the hell would I not be? Chat, last night I was up 500 bucks on micros, lost 400, didn't know when to walk away, lesson learned. Let me tell you guys something. If you're up money and you lose money, you give some of it back. What almost everybody assumes is that they did the wrong thing. Now, in many cases, you did. Because if you were up money and you started doing dumb things because you now have a padding, so you're like, well, I'm up 500 bucks. I can take this scalp that I would never normally take. You did that, yes, that you did the wrong thing. Lesson learned. However, if you were up $1,000 per account or in total, whatever, and you did logical things, you took trades throughout the afternoon that you know you should take, and you just so happened to give some of it back because one of them or two of them or three of them were losers, people like to say, lesson learned, I should have known when to walk away. You sound like somebody who's at the blackjack table. Because how would you know that? Your job is to have predictable, expected value on average on as many of your trades as humanly possible. When you throw them all together, does it float kind of thing? Okay, you throw them all together, average it. Expected value leads to a predictable profit. Which means that as long as you can maintain that, more trades is better. Now, a lot of you guys just heard me say more trades is better. No, I said more trades is better as long as you're maintaining the positive expected value, right? Theoretically, if you could have positive expected value, also known as statistical edge, on 1,000 trades a day, theoretically, that would be the best thing to do, right? Would be to take 1,000 trades a day. As human traders, obviously, that's extraordinarily difficult to maintain that at 1,000 trades a day, which is why we don't take nearly that many. All right, but don't confuse small sample size variance with doing the wrong thing. At the same time, vice versa, do not confuse doing dumb things or stepping outside of your discipline with small sample size variance. Does that make sense? They say, nah, this was at midnight, I was chasing. Well then fucking lesson learned, homeboy. All right, minute out. Let's see what we get here on 58. All right, we'll see if bar 58 here wants to take out that low a day. Low a day is where my cursor is. Chat, tilt happens sometimes. Gotta know when to stop and gather your thoughts. Market ain't going nowhere. It'll always be ready to be traded on. Yeah, you know what I think really causes tilt? And I think I'm just about certainly correct on this. It's the feeling it's the lack, I should say, of the feeling of making consistent progress. Like a lot of you guys, well, I don't want to call you guys out specifically because we're kind of a different bunch maybe around here on the averages. But a lot of people, I think they confuse frustration or sadness in some cases with what it really is, which is stagnation. You know, the goal, really, I get it. Like you have to make a lot of money, and you have to, life is really expensive, and you have to provide and all these things. But in reality, when it comes to just you being fulfilled and happy, the goal is progress. And with that comes all the other stuff. You know, 10xing your income, 100xing your income. The fucking sick penthouse in Miami if you're a fucking 21-year-old degenerate. We love it! Or a 45-year-old degenerate. Fuck, man, we love it. Or the fucking mansion in Montana, or the Lamborghini, or the fucking whatever. But I think everyone eventually comes to the conclusion at some point throughout that journey. Again, I'm not saying don't get that stuff. We love it. It's tremendous. It's all really fun. But the reality is that most people eventually come to the conclusion where it's like, even with those things, I'm less happy if I don't feel like I'm making progress, or with the things that you'd like, right? Whatever it is. Those are just examples. You would be less happy with those things if you feel like shit, like you're going backwards, than you would be without some of those things, or some of the things you would like, if you feel like you're getting closer to them and making progress on a daily basis. Now you might say, Nico, you're wrong, man. Well, give it a few years. I think you'll come around. Again, fuck. You should shoot for all that shit. We love it. I love it too. But there's levels to this shit. Question, can I copy you? No, do not do that. All right, 215 out. Nico, how long have you been trading for? It's just, well, almost 10 years. Fuck. Jesus. I'll say 9 to be safe, but getting close to 10 here. So you see how these bears are really hesitating to take out the low a day, which is currently the wick low bar 38? Yeah, that's not so unexpected here. ATR is still holding on to 37.38. If we stay in this wedge much longer, I'll tell you what, that ATR is going to drop into the 20s. So I don't want to see that occur. By the way, hey man, if you haven't yet, I appreciate you doing so. Hit like on the live stream. Helps out a whole bunch. All right, we got 47 seconds. So obviously the look right now is this. Baby bulls, man. They can't even get up toward the high of the body of bar 58. Embarrassing performance here, man. Bears, too, in the same boat. Can't even take out that low a day. Wick low bar 38. Nico, how do you know your volume and liquidity for the market you're trading like this one? You mean my volume and liquidity? I count contracts traded during the day, but I assume you're talking about the right in the platform. I assume you're talking about the volume and liquidity in the market. I'll tell you what, on NQ, I can feel it out. I don't need to look at market depth. I certainly do in stock world, but on Nasdaq futures, this is deep, relatively, most times of the day. And when it's not, it's very obvious to me, just looking at the chart, because you start getting more. The rungs on the ladder, I can see it in the movement, start getting wider. And that means the market is trading more thin or thinner. Also ATR, that's helpful, though you can't have high ATR environments with low volume. Or you can just look at market depth, volume itself, sure. But, like I've always said, in trading something like NQ, Nasdaq futures, it's like if you're watching volume like a hawk, you're spending a lot of precious mental capital. Let me make a comparison. You're spending a lot of precious mental capital staring at the depth gauge in the middle of the Pacific Ocean. You know what I mean? Now, if you're, sailing over a coral reef, fuck, that should have a lot of your mental capital. If you bottom out, man, you might be food for a big old great white. That's a problem. We can't do that. But in the middle of the Pacific, yeah, you might keep an eye on it if something crazy happens, but you've got bigger things to worry about than the depth, big dog. This shit's deep. It's fine. All right, big bar 60, 210 out. But, you start seeing a little island pop up on the horizon. You start paying attention a little bit more. Same way here in Nasdaq futures, you start seeing that ATR drop. You start seeing the rungs of the ladder, so to speak, get a little bit wider. You know that it's a little thinner. You start paying a little bit more attention. See how these bears are just tempting fate? That wick low of 38 is the low of day. I'll leave my cursor there. They want it. They want it. Now, you should understand, even if the bears take that low of day, can anyone in the chat tell me, is the probability, I'll just make it a yes or no, is the probability high that it turns back into a bear trend and continues lower? Is the probability high that if the bears take out the wick low of 38, that we turn back into a bear trend and continue much lower? Man, we've got a bunch of dogs in the chat. You guys are fuck. Are you guys all full-timers? For real? I don't know what it is, man. When I read this chat and I ask you guys questions, I should really be getting about 50-50 responses. And I don't. It's 80% of you guys get these questions right every fucking time, when people who are not full-time traders probably shouldn't be getting these right. Manuel, full-timer, my man, how long? How long all those payouts, man? Gotta pay for something. Paying those bills, big dog. And the extras. We love it. All right, we got big bar 61. There's a new low a day out of the bears here on NQ. Ray says, in my 6th month, full time. That's the goal, man. We love it. We love it. I love that. I love to see it. You know, by the way, there is nothing that I cannot stand more than when somebody speaks on things, like, for example, being a day trader full-time, as if you shouldn't do that. As if the way you should approach day trading is, you know, I really think you should do this part-time. This isn't really a full-time thing. Fuck that, homeboy! The goal has always been to every single thing you think that is true about being a full-time trader, like, man, life would be fucking... It's all true. It is fucking awesome. You're right. It's fucking awesome. We love it. It's everything you think it is and more. You don't have to go anywhere. There's no ceiling. You get to wake up, fucking kiss the old lady, head on in. You don't have to leave the house. You can trade in your underwear or not. Do whatever you want to do. I hear people all the time, they're like, man, you should really, day trading, it's not like a full-time thing. You should probably just do it full-time. What the fuck? What are you talking about? This shit's a dream come true, and you're saying don't go after it? The fuck's wrong with you? Pisses me off. All right, bar 61. You see that? You see what we just talk about? What we just talk about? I said, is the probability high that if we take out the low a day, that the bears just turn it right back into a big bear trend? And here we go, fading right back into the range. No, the probability is not high, and we're seeing that. Javaz, my man, says, thank you for all the advice you share. Of course, learned a lot just by watching the streams. Truly appreciate everything you do. My man. Appreciate you being here. And you know what? You really want to say, hey, thanks, man, for what I've learned from you. Don't say thanks to me. Just go fucking do it. Go do it. Go retire your wife. Be home with your kids. You want to homeschool them, man? Do it. That's how you can say thank you to me. Go do this shit. You know how the market could say thank you to me right now? To fucking all of us for sitting here staring at it for the last 2 hours while it does nothing except go sideways? Is break out, bring that ATR up to about 85, and give us a whole bunch of opportunities. That would be tremendous. That's what the market can do for us right about now. Chat, it's very, very frustrating that I prematurely left a good trade. I had short at bar 20. Okay? Then I got scared out, closed my positions prematurely at bar 23 after seeing 2 bullish bars. Yeah, I think that would have missed your stop. The way that I play stops is if I'm getting short, again, you guys have seen this. I'll take the wick high that I'm choosing or the signal bar, whatever it is, and I go 1 point above it. I've always done it that way. I just think it makes sense based on the volatility of NQ. If you're trading ES, by the way, you could do a tick. But on NQ, I do a point. Makes sense to me. I've always done it that way, and I think it would have avoided that stop. I mean, look, guys, I wouldn't beat yourself up about it. It's fine. But looking at this, shit, you guys can't even see this. Looking at this, you're like, man, I should have left it short. But realistically, don't you think you would have taken profit? You know, at an R or an ATR or even 2R, you wouldn't still be sitting short most likely, unless you're a straight up always in swing trader. So you got to be honest with yourself on the opportunity that you think you messed up. It's really easy to say, man, I was long. I could still be long right now. Yeah, but would you be is the real question. So we've got a big old flat bottom here. Okay, so bar 61 is the new low a day, the wick low. That's the new low a day here on NQ. And as you can see, we took it out. Bulls faded it right back in. We discussed that before it occurred, man. That's the highest probability thing. Would that doji on bar 62 indicate a reversal? On 62? Talking 61? On 61, does it indicate a reversal? No, they say 61. No, I would not classify that as signaling a reversal. It's far too early. What I would signal it as, or I guess what I would classify it as, is a failed breakout. A failed breakout. You might say, of what? I just joined. Of this. You got this, then you've got this. Right. So failed breakout of the low. New low of day, and reverses right back in. That's trading range behavior. Now, does that mean you should buy on that break? For me, after this kind of thing, no. Why? It's, you know, is it a logical thing? I mean, I wouldn't say it's so logical in this case because we had this big bear move, but I will say, and it's a new low a day, but I will say it's not, you know, some crazy out of left field mentality. You're saying I'm betting against the breakout. Okay, fine. The problem is, how do you manage your risk? Because it's the low a day. When you're buying the low a day, what are you going to do? Set your stop arbitrarily 40 points lower? I mean, I suppose you could, but it's definitely not the best trade you could be putting on. Which, I'd tell you, there's not a whole lot of that going around since bar 38. So we've got an ATR here at 35, 36. Bull's trying to take us up into the upper third of this wedge. So I'm actually going to get short. And bet against that breakout. There we go. Good. That's a logical thing to do. Let that sit, accept the outcome, move on. About time here, man, huh? Sitting right around 29.5, by the way. Of course, that's not an S tier level, just worth mentioning. Trading in the trend, chat says trading in the trend, I like it, but could touch your stop. Well, I'm not sure I'd call this a trend anymore. It's more of like a wedge, like we've been drawn. But of course, we had that big bear trend previously. All I'm doing is betting against a successful break. Well, I should say betting against a breakout above the wick high of 56. That's it. Just a range trade, I suppose. I'm not even sure I'd call it a scalp. But yeah, 100%. Any trade could touch my stop. And you know what, big dog? If it does, that's okay. Accept that outcome, move on with your day. You know, by the way, the beauty of this, you know, we've been having so much trouble getting down through lows of day. You know, that's all right. Nick, what's up, brother? How we doing? Appreciate you, my man. You know, I've been having so much trouble getting down through the low of day. The beauty of this, and part of the reason why I put this on, is I don't need it to get through the low of day to even hit a full ATR, which is, you know, 34 points. Even a full R, you know, doesn't even require that. So I'm hanging out, sitting short. Stop is set. 63 is a tiny bull body. There you go. A little bit of volatility here. Oh, you bears! Question, how do you manage poor performances? Oh shit, we got these bears stepping in, man. All right, I'll multitask. How do you manage poor performances? We all have ups and downs, and fucking truth, yep. Sometimes things just not going well and the win rates drop significantly. How do you manage such situations? Well, what I do is I always step back, and if I'm not performing as well as I know that I should be or could be, I step back and I look, and what I start with is, am I assessing context properly? Because what a lot of times what happens to do, easy, I'm not gonna do that, my man. A lot of times, what I'll step back and notice is that, oh shit, the reason I haven't been doing very well is because it's been a big range market and volatility's been really low, and I've been so just mind-numbingly bored from staring at the market for 6 hours trying to make sense of something that I end up taking trades that when I look at with a fresh set of eyes, it's like, I'm betting on a breakout in a range. 7 times out of 10, if I know that I could be performing better, I look back and that's what's happening. Now, that's being a victim to the market environment 100% when the volatility is not what it could be or what we would like it to be. And the market's really wicky and rangy. But I think really what that is intelligence working against you. You know, I said earlier how a lot of times traders, we can kind of be too smart for our own good. What I then try to do is I say, okay, I'm going to turn my brain off. I'm going to assess the context and do things that I know make sense within that context. And if there's nothing to do, I'm going to do nothing. And then the performance typically comes right back. No, as time goes on, you need to be faster and faster at recognizing that, because what you don't want to do is go 3 months, an entire season, and then look back and be like, oh shit. The entire summer I was betting on breakouts when I should have been taking range trades, betting against breakouts. Hope that helps. Helps me a whole bunch. And that right now is exactly what I'm doing, is betting against the breakout. So let's get these bears fading this baby, which is exactly what I should be doing here. Let's get these bears fading us away from that breakout. ATR 35.36. Come on, you bears, step on it, man. We're getting volatility, and then it dies, and then we get volatility. Feels like we're getting headlines. Nothing big as far as headlines. Chat, take profit, big dog. Man, my man, what profit? I'm $4 in the red. I can buy 1 negative coffee at a hotel. I'm gonna go ahead and hold that guy to target. Waiting all day here, man. All right, Bears. Tell you what, man, we don't have time for this. Yeah, these bulls step in, they think they're doing something. All right, so you've got those bulls attempting to break higher, and I'm looking at this and I'm thinking, range, man. Big old wedge. The bulls can try, and if they succeed, I suppose I'll be wrong, and that's okay. But until then, I gotta turn my brain off and bet against the breakout because it's a range. Yeah, sorry, bulls. Not a chance. All right. New 5-minute bar. We got big bar 66. Is 66 my golden child? Let's see. Let's see. Yeah, we got ATR down to 32 now. There we go. 88 bucks in the money. I should probably just pull it, right? Not a chance. ATR sitting 33. All right. ATR, sitting 34, 35-ish. Let's see, Bears. Fade that son of a gun. Come on. Slide through. Give it up, Bulls. I think I've created a bunch of monsters here in the chat. Now every time I'm 7 points in the money, all I'm gonna hear is take it, my man, take it. Motherfucker, not a chance. All right, ATR is 32, 33-ish. Off a cliff here, Bears. Well, thank you guys for encouraging the Bears here in the chat, because fuck, they need it, man. Off a cliff. Let's go. Off a cliff. Damn close. Question: when will you leave a trade prematurely? For example, when you want to trade a breakout and the next two bars pulled the price back into range trading, Will you wait until the initial stop loss be hit? My stop loss is placed where it needs to be placed to begin with. So I'm not typically leaving trades prematurely unless I get some sort of management decision price action bar, which those of you guys trading RAM know all about. I'm not going to get into it right now. It's a long conversation. But there are very specific instances. This is not one of them. Got a bunch of baby bears at the wheel, so problematic here. Question. Nico, why'd you decide to target a full ATR instead of a half ATR? Because I had room and the risk that I wanted to use, which is the wick high of 56, required that. We've got a new bar. Bar 68. Well, I will tell you something. This right here, waiting on a trade while it's going sideways, is the worst part of this job. I'll tell you that much. So if you can handle this, I think you're just about all set to be a full-time day trader. Because this is the worst part. Well, maybe minus it going sideways and you're not in a trade. But I would almost argue being in one while it goes sideways is more mind-numbing. All right. ATR 36. We got an ATR still sitting 36. Well, I'll tell you guys what, man. I appreciate all the input. But I'll tell you what else. It's not really up for debate, my man. ATR now 37. There we go. We got a new bar here, bar 69. Rolling over. ATR now 34. Boom! Full ATR out there. And I am flat. All right, let's keep it moving. Keep it moving. Question, what does ATR mean? ATR is an average true range. That's 35. That's 35. Which, by the way, if you don't know what that means, that's the average range of a 5-minute bar. Okay, so it takes the average range in points of a 5-minute bar based on the last 10 bars. Spits out that number. So right now that number is 35 points. Just helps us make more logical decisions as far as placing stops, profit targets, that equation with reward to risk ratio and estimated probability. If it gets real low when it's time to walk away, sizing. Sizing in your position is really important. Got to pay attention to ATR for that. So, you know, I get it. Like, it's easy to say when it worked out, but I would say the same thing. Those of you guys who've been around would fucking know. Had that trade popped and stopped me, I mean, look, guys, it's just, you have to be patient. Like, if you entered the trade, this is something that my RAM guys in the tomb, they seem to kind of struggle with until they stop struggling with it, and then they never struggle with it again. If you put the trade on, and you've had no reason as far as the price action to pull it yet, then the idea still stands, even if it hasn't gone to your stop or your target yet, correct? Because you've had no conflicting argument. You put it on, you've had zero conflicting arguments since then, so the idea still stands until it doesn't, based on price action, based on RAM. So I get it. Like, I don't like it either. I know a lot of you guys fucking lose your mind when that shit's going sideways. Me too. I get it. But I also know how important it is to just chill out, let it do its thing. Manage it bar by bar as necessary. And don't kid yourself as far as, oh, I should probably manage it. Should you? Or are you just getting bored in this trade? Well, I'll tell you guys what, man. Took a while, but it was worth it. It was worth it. Hey, Apex, my man. 90% off single day pass, code BIG, B-I-G, Take Profit Trader. You're trying to trade full time, you need money coming in. Daily payouts over there at Take Profit Trader. 40% off, monster deal. No activation fee when you pass. If, and only if, you use code BIG at sign up, B-I-G. All right, guys, I gotta go hit a meal. See you tomorrow, man. Kind of a slow Midas Monday, but we made it happen. See you guys soon.